December 2024, question 5C. So let's look at it together. Question 5C of December 2024. Now, the following information, somebody's asking you to distinguish between export levy and railway development levy as used in taxation. Even if you've never come across the words, get the definition from the word themselves. Export levy is a levy charged on exports. Railway development levy is a levy that is imposed on services that are on services offered at the railway at the railway terminus. When you're transporting goods and also passengers, mostly it applies to transportation of goods. And sometimes in some circumstances, it may also include the passengers, the cost of tickets when you're moving through the railway lines. You're charged some taxes or some levies with an intention of development of the railway services, provision, enhancement of the railway services. So in simple terms, the export levy is a levy that is charged on value of goods exported. Levy charged on value of goods exported, while railway development levy is levy charged on services at the railway station. So railway development levy is very specific. Its intention is to improve the services at the railway. And of course, even export levies are always associated with specific direct rewards. You are imposed for a certain objective. So export levy is imposed to enhance or to improve the exportation services, while railway development levy is imposed to improve the services at the railway station. The railway lines, servicing of the runway, the railway lines, the trains themselves, repairs and maintenance, those ones. Just ensuring that those services are in good condition. Now, analyze two circumstances under which a person may be considered to be a tax representative of another person for tax purposes outlined in the Tax Procedures Act. A representative is like an agent. So circumstances under which you are considered to be a tax representative of another person is when you stand in on behalf of the taxpayer on legal matters. So you can represent another person in tax purposes. For tax purposes, a tax representative arises in two key circumstances: when you're representing somebody else in legal matters at the tax tribunal, and of course, when you're representing somebody in filing of the returns as an auditor. You're a representative of the taxpayer. When you're filing the returns, as an auditor or a tax agent, you file the returns, you're representative, your client, you're representing your client, that is the taxpayer. And sometimes on the tax tribunals, when you're arguing a case on behalf of the taxpayer, you're also representing him or her. So let's have part C. That's where we are. We're told that the following information has been extracted from the books of accounts of Uniserve Limited, a supplier of office equipment for the year ended at 1st December 2023. So my advice is that be careful. The type of business that you're dealing with, like in this case, this is a supplier of office equipment. So meaning when they buy the office equipment, that is not a fixed asset, that is stock to them. Purchase of office equipment, hiyo ni stock. Because you are in the business of buying and selling office equipment. So trading profit before tax, that is the profit before tax. So that is for the operations. So home. Sorry. Now, trading profit before tax, that is the profit before tax for the business, unless kuna issues, tutaangalia, but it's taxable income, investment income, other incomes, rental income from commercial property, these commercial buildings, other incomes, leasing of photocopying machine, that must be other income. The following expenses were deducted in arriving at the trading profit before tax. So you have salaries and wages. Salaries and wages are allowable expenses. Contribution to retirement fund. So those contributions are allowable expenses. Yes. So the contributions are allowable expenses. Ni kama contribution to NSSF. That's a genuine expense of the business, so it's allowable. Depreciation tulisema ni disallowable. We allow capital allowances, we disallow depreciation. Bank interest, that's the finance cost, that is fully allowable. Estimated debts, 5% of total debts at the year end. Remember what we talked about, the bad debts. They must be specific. This is an estimation. So it's like a general provision for bad debts. You're just estimating. So disallowable. We need them to be specific. Legal and professional fees. We need to know what legal fees comprises. Repairs and maintenance, that should be allowable. Other expenses we must incur generate the revenue. Miscellaneous expenses, they're allowable, but we need to know what they comprise. Donations, only donation that is allowable is a donation to a charitable institution. If they're silent, we make an assumption. Installment tax paid, taxable income cannot be affected by tax. The only term that has the word tax on it and it is allowable is tax consultancy fee. That's our professional fee as tax people. Any other term that has tax on it is disallowable. So this one is disallowable expense. Taxable income cannot be affected by tax. Yani kuibia serikali. Salaries and wages comprised directors' emoluments of 3 million. Salary to directors, domestic servants of 1.4 million, and salary to other staff of 5 million. This is a company. When a company is paying directors, that's a genuine expense that is allowable. Partnership, salary to partners, no disallowable, but salary to directors, a company is a separate legal entity. So those are two different persons as far as the operations are concerned. Yeah. So salary to director is allowable, but directors, domestic servants, that's a private expense. Yes, here, that's not an expense for the business, so disallowable. But other staff salaries, fully allowable. Bank interest includes that of an overdraft taken by a senior manager of 400,000 and mortgage interest for a director's house. So a mortgage taken by the senior manager, that's a private expense. Kila mtu ajilipie expenses zake. We are only focusing on incomes of the business against expenses for the business. So the expenses that should affect the incomes are the expenses that strictly for the business, not private. So therefore, kuna hii overdraft yenye manager alichukua akalipiwa interest which is wrong, so disallowable, na kuna mortgage yenye director alichukua pia tuna add back disallowable expense. Then legal and professional fees comprised recovery of trade debts. I believe that one we said is allowable. Renewal of lease, these are 100 years. It's over 99 years, kwa hivyo ni disallowable. Tax penalties and interest. Penalties and interest will be disallowed. Ukipanishiwa kwa sababu ya makosa yenye ulifanya in taxation tunasema you would have avoided committing that mistake so that you don't incur that cost. But because you committed a mistake, we cannot allow you to deduct it as an expense. Director's loan collection, that should be disallowed. We're not in the business of giving out loans to directors. So anything relating to director, alipe tu salary yake, mambo ingine wachana nayo. Miscellaneous expenses include staff end of year party of 170. Hiyo ni staff motivation, kwa hivyo ni sawa, allowable. Parking fines are disallowable. Anything that you are charged as a fine, that means you committed a crime, you'd have avoided committing that crime. Donations were towards political campaign kitty. A political party is not a charitable institution, kwa hivyo ni disallowable. Wear and tear allowance was agreed at 2.8 million for the year 2023 with the Revenue Authority. Washatutengenezea WTA. Capital allowances. Investment income comprised interest from Fedha Bank. Remember what we said? Interest from interest received by a company from a financial institution or government security inaenda kwa other incomes. This is a company. It is Uniserve Limited. That's a company. So a company receiving interest from a bank, hiyo iende kwa other incomes. You may receive interest from fixed deposit in Lubanda Bank in Uganda. This interest is coming from outside Kenya. Kwa hivyo hiyo ni non-taxable. Think investment income, we can have some time today to summarize. I'm not sure if we summarize them. You'll confirm for me. Then we have interest from Sanlam Money Market. That's a financial institution. Kwa hivyo non-qualifying inaenda kwa other incomes. Then dividends from Dell Company and dividends from Tandao Cooperative Society. The only dividends that affect us are the dividends from a cooperative society that is not a SACCO. And here it is. All other dividends, noise. Rental income was arrived at after deducting the following expenses. Mortgage interest, that's a liable expense. Water meters installation. So water meters, those are fixed assets. Staff salaries are allowable. So fixed assets, they qualify for capital allowances. Replacement of iron sheet roofs with roofing tiles. So when you replace iron sheets with tiles, you are changing the status of the building. That's not a mere repairs and maintenance item. You're changing the status of the building. That's a capital item, which qualifies for capital allowance. Ingekuwa na replace iron sheets with other iron sheets, hiyo tungeweka kwa repairs and maintenance. But replacing iron sheets with tiles, you're changing the status of the house. Hata wewe kama landlord, you're likely to tell the tenant unaongeza rent. So compute the adjusted taxable profit or loss. So let's do it together to own where challenges may have come from. So they're called Uniserve Limited. Uniserve Limited. The Uniserve Limited. This is about 2023 taxable income computation. Wanataka pia tax liability and tax liability. They can have the figures in thousands of shillings. So I start with the reported profit, trading profit before tax. So reported trading profit. Now, we reported a profit of 76 million. And in arriving at 76 million, these expenses had been deducted. So 76,000. Remember hapa, kwa hii swali, maybe what brought some confusion was that examiner hajatutengenezea P&L, hajatutengenezea the income statement. Ametengeneza elsewhere na akaleta tu hapa the final figure that the profit before tax that we had, let me just explain it using another swali. It's like this one now. Wametupa this, the net profit, the profit before tax. That's what the examiner has given us without showing us this P&L. So it's upon us to look at it and appreciate, in arriving at this, some expenses were deducted and some incomes were included. Fortunately for us, they've only put the expenses that were deducted because the profit that we have, hizi incomes zingine ziko kando, so we shall not less the incomes because they've not affected our profit yet. So therefore, we add back disallowable expenses. We add back disallowable expenses. Salaries and tuanze na note number 2 in explain note number 1. Salaries and wages comprised of directors' emoluments is okay. Salary of directors' domestic servants, we can add that back. Salary of domestic servant. They paid a salary of how much domestic servant? 1,400. 1,400. Salary to other staff, that is okay. Bank interest include that of an overdraft taken by senior manager. We can also add back that one. So we have interest on overdraft by senior manager. Interest on OD by senior manager. We only focus on the correct expenses for the business. So that's an interest of 400. And mortgage interest for director's house, we also add back that one. So mortgage interest for director's house. Hawa naibia kampuni. Director ajipange na nyumba yake na expenses relating to his own houses. That's an amount of 600. The legal and professional fees, recovery of bad debts, that's okay. Renewal of 100-year lease. The duration of that lease puts it out. The renewal of 100-year lease. The lease was supposed to be of up to 99 years for it to be allowable. But since it's over 99 years, disallowable, that is 30. We have tax penalties and interest. Tax penalties and interest amounting to, I can see, 500. Tax consultancy fees and tax appeals. So the tax consultancy fees, that is allowable expense. That's a professional fee. Kama ingekuwa to the legal fee on tax appeal, hiyo ingekuwa disallowed, but what is allowing it is the tax consultancy fee, the professional fee. Director's loan collection, that should be disallowable. So director's loan collection. Director's loan collection, that is 50. So the miscellaneous expenses include staff end of year party. That's okay. Parking fines of that, you can add back the parking fines. The parking fines. That's 30. Donations to political party, we add back. Those are donations. Donations were how much, you could do? 1 million. So that is 1,000 in thousands of shillings. Wear and tear, your total less, it's allowable expense. So wear and tear allowance, that one is less. Investment income, taipeleka kwa other incomes. Rental income is any other income, shall take care of them there. Now, after that, we come back to our P&L. To our other easy expenses ziko kwa note number 1. Tuone kama kuna ingine hatujaguza. Salaries, they're okay. Contribution retirement fund is okay. Can add back depreciation. Depreciation, that is 4 million. 4,000. Bank interest, estimated debts, we add back estimated debts. Estimated debts, that is 400. Legal and professional fees, we've taken care of that. Repairs and maintenance, that's okay. Miscellaneous expenses. So I have miscellaneous expenses there. That should be allowed. Donations to Mezungumze. Installment tax paid. Installment tax paid. It was paid of how much? So the installment tax that was paid 2,200.
Sawa. Lisa, kuna machungwa hapa kuja kule.
So 2,200.
Mama wacha kunikuletea. Yeah.
I think that's fine. Now, we less. So what are we lessing? Capital allowance was there. Capital allowances were agreed. Wear and tear allowance, those are the capital allowances, 2,800. You're to less. Any other thing that affected our business income? Now, traditionally, tungeless hizi other incomes pia. But now we only less what affected your profit. In arriving at this profit of ours of 76,000, these ones, the investment income, rental, and the leasing was never included. So it's not part of this profit, so it cannot remove it. You only remove what is there and it's wrong to be there. In our case, these other incomes are not part of the 76. Kama wangekuwa wametupa the total hapa chini, these ones included tungezitoa. So hatuwezi zitoa kwa sababu they are not part of it in the first case. So there we go. So we need that total. Sorry. Can put it here. So 10, 6, 10. Alafu hii tuna less. So equals to negative of these. So therefore we have our adjusted business income. So we take this, we add back this, and we less this. So these are adjusted business income. Then at that point, you now bring in other incomes. You bring in other incomes. Other incomes do hizi ziko hapa juu. You have the rental investment income. Investment income, there's a breakdown in note number 8.
Yes.
Interest from Feather Bank. Interest from Feather Bank. It's a company receiving the interest. Wamesema ni gross, meaning it's okay. Ingekuwa net, ingemaanisha hiyo ni 85%, take it back to 100%. This 2760. It's always gross unless otherwise stated. Sema ni gross, you want it gross. Inamaanisha hakuna withholding tax imetolewa. We have fixed deposit in Lubanga Bank. So interest from fixed deposit in Lubanga Bank. So these are, it's coming from Uganda, it's coming from outside Kenya. Kwa hivyo ni kelele, the only interest should be financial institutions in Kenya. Sanlam Money Market, so interest from Sanlam. Sanlam Money Markets walisema ni net, so take it back to gross. So therefore, if that amount equals to 85%, what is 100%? So 100 divided by 85 times 3,400. So there we go. Then we have dividends. Dividends from daily company. Hapo ni dash. They're not coming from a cooperative society, but we have dividends from Tandao Cooperative Society. Dividends from Tandao Corp. Wamesema ni net. Take them back to gross. So 100 over 90 over 85 times 1900. Sorry for that. So for dividends from Tandao Corp, wamesema ni net. Anything that is net inamaanisha kuna kakitu kametolewa. In our case, hiyo kitu yenye imetolewa ni withholding tax, which is always at 15%. So those are the net dividends. Then note number 9 is about rental income. They have rental income. The rental income was arrived at after deducting. After deducting inamaanisha ni net. Itamwagika. Imefungwa. So after deducting inamaanisha ni net. So therefore we have net rent. They reported net rental income of 69.20. Let me put it here. 69.20. We shall add back any disallowable expense. Add back disallowable expense that is there. So mortgage interest, there's an interest on mortgage, yon loan interest kwa hivyo ni allowable. Water meter installation, that's a fixed asset. Why am I saying that water meter is a fixed asset? Because once you install the water meters, they'll serve you for more than 1 year. And an expense that will serve you for more than 1 year, that's the capital expense, not revenue. Capital expenses are fixed. It's just like saying I'm buying a motor vehicle. The cost that I'm incurring now will affect me for more than 1 year. So water meter installation, we add back, there's an amount of 860. 860. Staff salaries is okay. Replacement of iron sheets, roofs with roofing tiles. So replacing iron sheets with tiles. Hiyo pia tumeexplain tukasema that's a capital expense. We are changing the status of the house. And for that reason, it becomes capitalized. So that is 2,400. It's not just a mere repairs and maintenance. There's an overhaul. What other income do we have here? We had leasing of photocopying machines. Leasing of photocopying machines. So we list the machines at 1,000. At 1,000. And I believe tumemaliza swali. So we are adding back. So we shall we less the capital allowances. We less the capital allowances. Lakini sasa examiner alikuwa ashatuambia kuwa wear and tear allowance was agreed at this for the revenue with the revenue authority. So hakuna chenye tuna less tena. KRA ishawaamulia wakisha agree na KRA kuwa kampuni italipa capital allowances za 2.8 million. Don't start calculating again. So we just simply add back these ones. There we go. And now we have our total taxable income. So equals to adjusted business income plus other incomes. Any swali? Where did the challenge come from, if I may ask? Or the interpretation?
The treatment of other income. I thought we had to add it back.
No, to less, not add back.
Okay.
Yeah, other incomes ukiangalia kwa zile maswali zingine. Anyway, when you're preparing the taxable income, just be careful. Your reported net profit, what items has affected it? The items that have affected it are the items that we shall adjust. In our case, the items on other incomes had not affected this profit of ours. It is independent of these others. That's why we have not removed it. We have not deducted, not adding back if we've not deducted it hapa. As we less the capital allowances, tungeless pia non-taxable incomes, tungeless non-business incomes zote. But now we cannot less them because they didn't affect our profit that we started with. This profit has nothing to do with these other incomes. That's why I've not list. I hope it's clear.
Yes.
Great. So tax liability, simply, it's a company. So 30% of 103,985.29. Then we come and less withholding tax relief. Withholding tax relief. Zile interest, mostly zinakuanga kwa other incomes, interests and dividends. The ones that you've taxed them again, be sure to give a withholding tax relief. So tuko na withholding tax relief ya kwanza on interest from Fedha Bank. Interest from Fedha Bank. So the 4,000, remove the 15%. 15% of 4,000. That's actually 600. Is the difference between 3,400 and 4,000. No, hapo tunaanguka. Fedha bank is 2760. Sorry for that. 2760. So 15% of 2760. We also had interest from Sanlam. Interest from Sanlam. So this is also 15% of 4,000. So you give the relief on what you taxed. You taxed the 4,000, not the 3,400. So that is what gives us the 600. We also, what else do we have? Dividends from Tandao Corp. Tandao Cooperative Society. That is 15% of those dividends are where 2235.29. So there we go. So therefore, tax liability, tax payable, tax liability or tax payable. So becomes this minus this minus the withholding tax reliefs. So hiyo ndo anafaa andikie KRA barua, andikie KRA cheki yake. Any swali? Which was the other one? Unless kama kuna swali. We have another one that we should handle. Kama tuko sawa sasa.
August 2024, question 4B.
So August 2024, question 4B. Mm-hmm. So Waka and Baraka. Great. So let's focus on Waka and Baraka, who started a partnership business in the year 2022, sharing profits and losses in the ratio of 5:3. So this is a partnership. Just remember the special rules of a partnership. No transaction between the business and the partners. So they're sharing profits and losses in the ratio of 5:3, respectively. The following is the statement of profit or loss of the partnership for the year 2023. So you have sales. Sales belong to the business, that's okay. General bad debts recovered. It's a general bad debt that has been recovered, so it's non-taxable. We shall remove it from the business. Anticipated foreign exchange gain. It must be realized. This is only an anticipation. It has not yet been realized. It's what we are hoping to have. For it to be taxable, it must be realized. This one is not yet realized. Capital gain on sale of land. We are not in the business of buying and selling land. Kwa hivyo hiyo ni non-taxable. Insurance recovery on stolen motor vehicle. That's a capital item. It would be revenue item if it would be insurance recovery on stolen stock. Items of the income statement, not items of the balance sheet. Motor vehicle is a balance sheet item. Then release of liability, we need to know which liability it is. Amesamehewa deni, nataka kujua ni deni gani. Kama ni la biashara, tutaitax. Kama si la biashara, hatutaitax. Interest from Ulinzi Sacco. So Ulinzi Sacco, that is an interest being received by individuals. Partnership is individuals. Kwa hivyo, interest received by individuals does not affect, you're non-taxable. It doesn't go to other incomes. Interest that goes to other incomes, I repeat, is only the interest received by companies only. And those companies are receiving that interest from financial institutions and government securities in Kenya, of course. We left expenses, purchases are for the business, that's okay. Purchase of computers are fixed assets. When you purchase computers, you don't bring in the P&L the way the accountant did. So hiyo ni kuibia serikali, we shall add back, but we shall give it the capital allowance, shall see. Repairs expenses, that's a genuine expense of the business. Legal and professional fees, subject to confirmation, what they entail. Rent and rates, that's a genuine expense, we must pay rent. Interest expense, genuine expense unless come up na interest to partners. General expenses, allowable expense unless otherwise stated. Motor vehicle expenses, that should be allowable. The motor vehicle running expenses, fuel, repairs, hiring, whatever. The running expense of the motor vehicle fully allowable. Insurance, fully allowable, bora ikuwe expense ya biashara. Welfare expenses, fully allowable unless it is welfare of the partners. It should be the welfare of the staff. Kama uko silent, it's an expense for the business, and you can go with an assumption. Is it for the staff or for the partners? Audit and accounting fees, that's consultancy, fully allowable. Computer software and programs, those are fixed assets. You are buying the computer software as a fixed asset, shall give it the capital allowance. Traveling expenses, fully allowable, and they arrived at the net loss of 2750. So legal and professional fees comprise legal fees on defense against an alleged breach of trade contract. It will be allowed if successful, so you must go with an assumption. So just put into brackets, successful you allow, unsuccessful you disallow. Legal fees on tax appeals, that's tax related matters, given disallowable. Hiyo inakuwa disallowable. Land conveyance fees, you are transferring property, that's fixed assets, disallowable. Stamp duty, you can assume the stamp duty is associated with the transfer of land, so that you disallow. Because they are silent in stamp duty on what? So attach it to any of the transactions that attract stamp duty. Transfer of property attracts stamp duty. Negotiating a business loan cannot be allowed. You're not in the business now. As far as the business loan is concerned, what is allowed for business loan is the interest on loan, not the cost of getting the loan. So that is disallowable. Recovery of bad debts, fully allowable. Recovery of bad debts, fully allowable. Then we have signing a 100-year lease agreement. So 100-year lease agreement, the lease is over 99 years, kwa hivyo disallowable. Purchase of partner's private vehicle, that's a private expense, kwa hivyo disallowable. Legal fees on renewal of patents. Patents are fixed assets, so cost of getting them is disallowable. Repairs expenses comprise purchase of furniture. Furniture is a fixed asset, disallowable. Designing and partitioning new office block. When you design and partition office block, that's a fixed asset. The partitions that you are making will serve you for more than 1 year. So that makes it a fixed asset. Repainting of old office block. When you repaint, those are repairs and maintenance, kwa hivyo ni allowable. Just thinking around the information that has been given. Now, the 682, which is the repair expenses, accountant alichukua 682 akales kama expense huku. And that's why tunasema, okay, this expense, is it all genuine? And the answer to our question now is in note number 2. Out of the 682, kuna furniture ambayo tunafaa tuitoe, we shall add back, na kuna design of partition and partitioning of the block tunafaa tuitoe. So only 81,000 is a genuine expense. General expenses included impairment of patent rights. Impairment ni sawa na depreciation, sawa na amortization. In taxation, we don't know what it is. We only know capital allowances. Kwa hivyo ni disallowable. Provision for general bad debts ni general bad debts, kwa hivyo disallowable. Drawings of goods by partners. When partners make some drawings of goods, they affect the closing stock. They understate the closing stock. So meaning when you're taking our stock at the end of the year, your stock yetu, closing stock ilikuwa understated kwa sababu kuna drawings zilikuwa zimefanyika za goods. When closing stock is understated, profit is also understated. Remember, the relationship between the closing stock and sales have a direct relationship with profit. If they're understated, profit is also understated. So meaning we shall add back the drawings of goods. Purchases and sales were inclusive of VAT at the rate of 16%. So purchases are overstated by 16%. Also sales. Closing stock was valued at 1.2 million. Opening inventory was valued at 10% of sales net of VAT. Both opening and closing stocks were undervalued by 10%. Wow. When closing stock is undervalued, profit is also undervalued. We add back. When opening stock is undervalued, profit is overvalued, so we less. It takes us back to Kozile Note Z relationship. The opening stock and purchases have an inverse relationship with profit. If they are overstated, profit is understated. And if the profit is understated, how do you correct? Add back. If they are understated, profit is overstated. So how do you correct? You deduct. Interest expenses include interest on partners' capital of 120,000, which was shared according to the profit and loss sharing ratio. The partners agreed that they would not receive salaries until the business starts making profit. So compute the adjusted taxable profit. No problem. So Waka and Baraka. Waka and Baraka. Waka and Baraka. So it's about 2023 taxable income computation. You can put our figures in thousands of shillings. So you can start with the reported net loss. Well, report net loss. They reported a net loss of 2750. So negative 2750. So it's just the same thing na ile yenye tumefanya, ni vile tu ile yenye tumefanya examiner alificha hizi akatupea to the profit, the final figure, na akatupea hizi other incomes, na akasema in arriving at the final figure these other incomes were not part of our workings. So we add back disallowable expenses. We add back disallowable expenses. We start with additional information. The legal fees comprise legal fees on defense against an alleged breach of trade contract. So defense for breach of contract. Defense for breach of contract. So you put into brackets, we can assume it was successful. And if you assume it's successful, then that becomes a genuine expense. So you add back 0. Because inamaanisha that is the correct expense for the business. It's at the right place. Legal fees on tax appeals. Tax appeals cannot be allowed. That is 64.8. $64.8. Land conveyance fees. To convey to transfer. 72.4. So that is conveyance of land. Stamp duty. Any assumption made must be precisely and concisely stated. So to assume hii ni on transfer of land. Examiner is silent, so he expects we interpret now make decision. So the stamp duty kama ni transfer of land inakuwa disallowable. That is 36.6. That's 6.6. Then we have negotiating a business loan. Negotiating business loan. We also disallow. That is 25.4. 25.4. Recovery of bad debts, that is okay, very genuine. Signing a 100-year lease agreement. The duration of that lease puts us off. Signing of a 100-year lease agreement. That's 128.4. 128.4. Purchase of private vehicle. Purchase of partners vehicle. That is 137.4. Legal fees on renewal of patents. On renewal of patents, we incurred a cost of 126. Patents are fixed assets. So you're correcting the mistakes or the messes made by the accountant. Repairs expenses comprised purchase of furniture. Wananunua furniture wanaweka kwa income statement badala ya kupeleka kwa balance sheet. Na walete depreciation kwa income statement. So purchase of furniture 260. Designing and partitioning of new office block. Design and partition of office block. That is 341. Repainting of old office block, that is okay. General expenses included impairment of patent rights. That's an impairment. Impairment of patents. That is 120. Those are fixed assets. Kama depreciation. Provision of general bad debts. Hiyo ni general. Provision for general bad debts. Examiner ikiwa silent and expect to make assumption. In this case, he or she is not silent. Ashakwambia ni ya nini. Drawings of goods by partners we add back. Drawings of goods by partners, that is 314. 314. Note number 4. Purchases and sales were inclusive of VAT at the rate of 16%. So meaning purchases and sales were overstated. When purchases are overstated, profit is understated. So to correct, we add back. So we add back VAT on purchases. VAT on purchases, that is 16 divided by the amount of purchases that was reported is inclusive of VAT, meaning that amount is not at 100%, is at 100 plus 16. So purchases zetu ni za ngapi pale juu? 3706. 3706. That is the VAT. So even sales are inclusive of VAT, meaning sales are overstated. When sales are overstated, profit is also overstated. Hiyo tutadeduct. Then tumeambiwa nini? Closing inventory was valued at 1.2 million, while opening inventory was 10% of sales net of VAT. Both were undervalued. So when the closing stock is understated, profit is also understated. So you shall add back. So you add back closing stock under value, under valuation. So they were undervalued by 10%. So 10 meaning the amount that was given was not 100%. It was 100 less 10. So meaning the amount is 90. So if 1.2 million equals 90%, what is the 10%? So the amount reported was not 100%. It was less by 10%. That's what Mandiwa, it was undervalued. That's what we've been told, it was undervalued. Great. So opening stock was undervalued. Opening stock is undervalued, profit is overvalued. So you're less. So less VAT on sales, appear less undervaluation of opening stock. Interest expense includes interest on partners' capital. So let's add back interest on capital. That's an amount of 120. 120. Haya, turudi pale kwa expenses zetu tuone kama kuna yenye tumeacha. Purchases, tumedeal na purchase of computer. Add it back. Purchase of computers, that is 216. 216. Repairs iko sawa. Legal and professional fees, we've taken care of that. Rent and rates is okay. Interest is okay. General expenses is okay. Motor vehicle expenses is okay. Insurance, welfare expenses, audit and accounting, computer software and programs. We also add it back. Computer software and programs. That is 1,200. Traveling expenses, that is okay. Great. After seeing what to add back, I think we've taken care of everything to add back. Unaanza na additional information, urudi kwa P&L uone kama kuna yenye umeacha nje. Then we now look forward to less. We can start by lessing VAT on sales. VAT on sales. 16 over 116 times, how much is our sales? 5780. We also had opening stock undervaluation. Opening stock undervaluation. Which is tuliambiwa 10%, so 10 over 90 times. Allow me to play. Walisema the opening stock was valued at 10% of sales net of VAT. So opening stock is 10%. 10% times 106. Now the wamesema kuwa closing stock is 1.2 million, while opening inventory is valued at 10% of sales net of VAT. 10% of sales net of VAT. So tupate kwanza sales net off is without. Net off net is after the VAT. So the sales without the VAT. Ile figure ya sales tulikuwa nayo pale juu ya 5.78 million iko na VAT ya 16%. So this figure is at 116. Can you take it back to 100%? 100 over 116 times 5780. Why it doesn't make sense? Please ask. So there you go. So I repeat that place of opening stock. Wametuambia kuwa the opening stock was valued at 10% of sales net of VAT. So sales net of VAT is sales after VAT, sales without the VAT. So the amount of sales that were given pale juu, they were inclusive of VAT. So they were sales gross of VAT. So toa VAT, VAT ni 16%. So ile figure tulipewa hapa juu, it's not at 100%, it's at 116. Sales net of VAT is the sales without the 16%. Without the 16%. So if 5780 equals to 116%, what will be 100%? 100 over 116 of this. So hapa tu peke yake, these are the sales net of VAT. But the opening stock is 10% of the sales net of VAT. So hii ni opening stock yetu. Alafu tuna shida iko, hiyo opening stock iko undervalued by 10%. So meaning even after getting all this, it's not 100%, it's 90%. So what is the 10%? So what is the 10%? That is what we've done here. Great. Let's see what to less again. So VAT tusha deal nayo. Closing stock na opening stock tusha deal nazo. So tuende pale kwa incomes. General bad debts recovery, we need to deduct it. That's a non-taxable income. General bad debts recovery. Bad debts recovery, that is 75. Kama zingekuwa specific, tungezi tax. Anticipated foreign exchange gain. That's only anticipation, not realized. Anticipated forex gain. So we deduct 180. Why are we deducting? Because the incomes increased our profits. So to correct, we deduct. To correct our profit, we deduct because they overstated our profits. Capital gain on sale of land. We're not in the business of buying and selling land. So capital gain on sale of land. There was a capital gain of how much? 352. Insurance recovery on stolen motor vehicle. So insurance recovery on motor vehicle. Insurance recovery on motor vehicle. So that's a fixed asset, 320. Release of liability. This can only be a genuine expense. Ni kama kupewa discount. So you can just put into brackets for business. So that equal allowable expense, you don't remove a taxable income, sorry, you don't remove it. Then what else do we have? Interest from Ulinzi Sacco. Interest from Ulinzi Sacco. So interest from Ulinzi Sacco. So we less how much? That is 34. Then you also less capital allowances. Kwa ile swali nyingine walikuwa washatufanyia hapa, wajatupa the figure for capital allowances. So very simple. First of all, ni list all the assets that were purchased. Tuko na computers. The cost of computers was 216. We shall look for its rate pale kwa leakage. Other than computers, what else was purchased? Repairs, legal, computer software and programs. So computer software and programs. The cost is 1,200. We shall look for its rate pale kwa leakage. Any other thing affecting us as far as fixed assets are concerned that we purchased? Purchase of partnership vehicle, purchase of furniture, not number 2. We have furniture. So we purchased furniture at a cost of 260. We shall know the rate. Partitioning. So we have partitions. Partitions 341. We shall know the rate. Then repainting. Provision for general drawings of goods. I think those are the only assets we have. Those are the only assets that we have. So turudi pale juu kwa leakage yetu. Kwa hapa computers. Computers ziko hapa kwa kategoria computer software. Wamesema rate yake ni 25%. So therefore computers ni times 25%. That is for computers. Software tumeona in the same category, 25%. So 300. So furniture na partitions ndo zimebaki. Ukiangalia furniture tuko nayo hapo, wamesema ni 10%. Everything is always provided for. So this one, sorry. So furnitures times 10%. So 10% of 260 is 26. And partitions also fall in the same category. Ukikosa kuzipata hapa, kuna hapa ka category kanaitwa others. Na pia ni 10%. So that is 34.1. That's 34.1. So we are good. We are good to go. So we need to add back this. We need to add back that. So total ndio hiyo. And we shall less this. We shall less that. So that now our adjusted business income becomes reported loss. We add back disallowable expenses, then we less. So this is still D, not E. So there we go. And that is our first 12 marks. I hope I've not rushed. Partnership, other incomes don't appear here. So you don't handle it vile tumehandle ingine. You see this other one, other incomes tulizileta chini ya adjusted business income, tukaleta other incomes hapo chini. For a partnership, other incomes go in the allocation schedule. And that is the required number 2 of this question. So let's have allocation schedule. Where it doesn't make sense, please feel free to ask. Allocation schedule. So for the allocation schedule, we have the 2 partners. Tuko na partner moja anajiita Waka, mwingine ni Baraka. So we have Waka and we have Baraka. And we have the total. So we have Waka, we have Baraka, and we have the total. Figures in thousands of shillings. So the partnership agreement said that they will not earn any salary. So hata hapo ukiweka salary to partners, utaweka dash. Because they agreed no salary until the business ikuwe mzuri. The partners agreed they would not receive salary. We have interest on capital. Interest on capital, they shared according to the profit and loss sharing ratio. So total interest on capital is 120. Out of 120, how are they sharing profits and losses? 5:3 respectively for Waka and Baraka. So Waka anapata 5, Baraka anapata 3, na total ni 8. So therefore, interest on capital, for Waka we have equals 5 divided by 8 times 120. Then this is 3 divided by 8 times 120. We don't have interest on drawings, we don't have commission, we don't have bonus. That is it. We can have share of profit, and we have our business income. Business income stroke loss. So you have a business loss of 962.71. 962.71, and this is a negative. Now, in arriving at this, out of the negative of 961, we are paying interest on capital of 120. So the balancing figure, very simple. So unajiuliza, what should I add to 120 to get this? So simply this minus this minus E301. So this, so the balancing figure. Najiuliza, if I take 0 plus 120 plus x equals negative 962.71, what will be that? So the balancing figure, alternatively just take the total minus zile zingine zote. Ikiwa negative, weka to minus minus. So this is the loss that they're supposed to share, and they're supposed to share based on their profits and loss and sharing ratio. So equals to 5 divided by 8 times that. Na ingine ni 3 divided by 8 times that. Then you add. So you add for Waka, you add for Baraka. Hivyo tu. Alafu sasa hapa chini ndo tunaleta other incomes. In our case, other incomes pale juu tuko na chochote kweli? Ulinzi interest ilitoka kwa Ulinzi Corp na these are individuals, kwa hivyo ni kelele. Hakuna. So other incomes, they are not there. So we have our total taxable income. Na kwa sababu ni negative, losses are never taxed. So because it's a negative, this one becomes loss carried forward. Loss carried forward. It's as simple as that. So this plus this is C. Any swali? Even as tumemaliza. Any swali for that needs some clarification? Kama tuko sawa, tupeane homework.
It's okay.
The rest are okay? So there is December 2023. So you can see every sitting has a question. December 2023, question 4B. December 2023, question 4B. So try them out so that in the next class we talk about capital allowances so that we can have now a clear understanding of what they are all about. I'll try to share some recording on capital allowances in advance, kujaribu kupitia, so that it doesn't look like something that